Hello traders, so welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. So first day, not much of a volatility as we are all expecting. We had some nice movements on oil. Let me show you first the economic calendar. Here, as you can see, movement on oil was caused by worse than expected data. EIA, crude oil stock change. It was anticipated that we will have a decline, but we had much higher number, plus 2 millions, 2.2, which, as you can see on the chart of WTI, here this decline is caused by this worse data. Before we will start to analyze this situation from the technical point of view, let me just come back to the calendar. Because Thursday, if you compare Thursday to the other days in this week, we can say that Thursday is relatively busy in terms of the macro data. What we do have here is GDP from United States. GDP price index. GDP annualized. Also durable goods orders, also significant data. All it will be shown in an hour and a half, and for sure will have a huge impact on the market, especially that market is relatively flat. Okay, we can come back to the charts. Right now, and let me explain you WTI from the technical point of view. From the technical point of view, we are having this inverted head and shoulder formation here and this flag which triggered the buy signal, but buy signal, it's not denied, it's paused for a little bit because of this worse data. This decline is not sharp, is not aggressive, is not switching the trend here, because even if you look at the trend line, we still have some space here. We are still above important horizontal support on 23.6 Fibonacci level, also 38.2 Fibonacci. As long as, well, this first one can be broken, the second one is more important, this green one, and we can assume that as long as the price stays above the second support, the sentiment here is positive. Very interesting situation was on DAX. DAX opened with a bearish gap, and as it happens, it's one of the principles of the price action trading that when you have a gap, gaps like to be closed, right? So don't bet all your money on a gap close movement. But you have to be aware of the fact that gap closing movements are very, very probable, and they should happen sooner than later. This happened straight away, right? So we had a lower opening, the price advanced higher, they closed the gap, and then mission accomplished, and the price went lower. We tweeted about this possibility today morning, when the price was around here. So if you're following us on our Twitter, you could benefit from this situation, from one of the principles of the price action trading, which again is gap closing movements. Okay, time to change accounts. And let's go to the forex market and commodities like precious metals. What we are having here is silver. Silver was in a very good shape yesterday because we had this double bottom formation. The price advanced higher above an important support. How the support is important you can see on this chart. There was a nice hammer on the daily candlestick. But they just couldn't hold it. The main reason of that is much stronger dollar, not with euro, but with other instruments. So euro is now very strong, as I will show you here. Well, it was very strong an hour ago, but generally it's stronger than dollar today. But dollar is also very in a very good shape today. That is why price of silver and gold is going down, as you can see on the gold as well. On the gold, situation is bearish, stays bearish as long as we are below this red line. Traders have no grounds whatsoever to think about buying gold here, at least in the midterm. Because in the long term, current price can be attractive for you, right? I don't say no. But in the midterm and the short term, there are no trading buying signals here on gold. Let me come back to silver one more time. To sum that up, buy signal from Tuesday is denied. It was still on Wednesday, but today on Thursday this signal is denied. Why is that? Because the price went below this long-term support on 15.95 cents per ounce. As long as we stay below this support, the sentiment is definitely negative here, as on gold. Why do I say that dollar is stronger? Well, it's more than enough to look, for example, on Australian dollar to American dollar, where we have a decline. So actually, we just posted our trading sniper video with the best trading occasions. I advise you to look at that videos. They are published daily before a daily analytical report, where we publish the 3 best trading occasions on the market at the moment. 2, 3. Depends. It's not always gonna be like that we have 3 decent trading occasions on the market in the same time, right? Sometimes market has no occasions whatsoever. So then we will tell you that in our view you shouldn't trade. But today we had 3 occasions. One of them was Australian dollar to American dollar. You know, if you follow our Twitter account, you know that when the price broke this lower line of the wedge and this horizontal support here, we were telling about possibility of a further decline. That maybe it's not for sure, but there was a very high possibility that the price will decline, and it did. We had just one bullish day here, but that was just a flat correction, and now the price is advancing lower. Where we are aiming at this level, 60 pips lower. Why this level, in my opinion, is relevant? Let me show you on a daily chart. Because these are lows from May, and they can be treated as a closest support. Can, but does not have to. As for example, if you will see here, that also was a potentially strong support because it was a support in June, also in November, but the price just crashed that support and went lower. The same thing can happen here. I always tell you not to take the supports and resistance for granted, that there should be a bounce or a breakout. You should always wait for the reaction on that level, if the price respects this level, because maybe you just spotted this level wrong and it's not even there, and the price will just not recognize it, right? So don't take it for granted that there is a support or resistance. It's a potential place that something can happen, but does not have to. So if you think that something will happen there, wait for it. Wait for it. I know you can waiting can cause you missing first part of the movement. So you're missing few pips, but then at the same time you gain a little bit of certainty. Euro dollar. It was one of our heroes of Trading Sniper, because on euro dollar thing looks weird, I would say, because in the same time we have two trading signals, opposite trading signals. So we have a double bottom formation here. First low, then second low. It's proved by divergence on MACD and RSI and other indicators. So a double bottom formation also, along with the breakout of this red line, is giving us a buy signal. Mid-term, short-term buy signal, obviously not long-term, because for a long-term buy signal we would have to come back here above 1.0520, which is a long-term resistance here right now, but it gives us a short-term, mid-term buy signal. But on the other hand, if we consider this downswing, this wedge, then a downswing, then a flag, then a downswing, then a flag, we can see this situation as definitely bearish. Why? Because trend is bearish and price now is locked in a trend continuation pattern. So if there is a trend continuation pattern, it gives us hints that trend will be continued, and trend is negative here. So if you're a bear on this instrument, you will see flags. If you're a bull, you will see double bottom. But the thing is to be a trader, not a bull or a bear, but to be a trader and spot good trading occasions. For me, as the situation here is not clear, I'm gonna avoid euro dollar because I like to enter instruments where all the odds, all the factors, all the parts are giving me one direction. Euro to British pound is stronger euro today, caused an upswing here, which actually caused a breakout, bullish breakout from this. We can call it a pennant, we can call it a symmetric triangle, it doesn't really matter. What matters is it was a sideways trend on a very important support. So we were awaiting either for a bearish breakout of this lower line of the formation along with the horizontal support, or a bullish breakout of this upper line connecting recent lower highs. What we are having today is a bullish breakout, so we can assume that this breakout will be sustainable and is legitimate and should help to drive the price 100 pips higher, where the next resistance is, right? So if you believe that this breakout is sustainable and it's not a false breakout, which happens, you can still benefit from this movement, because from the technical point of view, the price should go 100 pips higher from this point. British pound to American dollar. As you can see from this chart, British pound is weaker today, and you can see also here that this support, this support is under the pressure right now. So we are testing it once, twice, third time, now we're having a fourth time, and actually what we're having here is a pennant, much smaller than this one seen on euro to British pound. And we can see a bearish breakout here, right, which increases the odds for a downswing. Also, this is not a sure bet for me. I would say it's like 55 to 45 for bears here. Another instrument, American dollar to Swiss franc. You can see that support is shaping up here. This low, this low, this low. We have a reaction. But it's still, sentiment stays positive here. Price is still making higher highs and higher lows. Maybe we started with a lower high here, but we have higher lows. So it's a trend continuation pattern right now. So this flag is no longer on the table. What we are starting to have here is a pennant or symmetric triangle, which is a trend continuation pattern, and this movement here is more probable at the moment. American dollar to Canadian dollar advancing higher when we bounce from this lower line of the channel up formation or the flag. It's getting a little bit too long for a flag, actually, because as you can see, the downtrend started at the end of January and finished at the end of April. And then we have an upswing from May till December. So as you can see, the upswing is longer than the downswing. But it's flat, because it didn't even retrace 50% of this downswing. As they say that bears take the elevator and bulls climb the stairs. Right? It's a perfect example of this kind of situation. But we're slowly approaching this horizontal resistance here, and it will be the real test of the sentiment. As long as the price stays below 50% Fibonacci, the sentiment here is negative. If we'll have a breakout here, that would mean that we should have a mid-term, short-term uptrend here. Australian dollar to Canadian dollar. What I would like to show you on a daily chart, because here we don't have any movements whatsoever. But look at that. Sideways trend created with three pin bars, with long heads and long tails. So it's just a horizontal trend, just a rectangle like that. For a proper trading signal, for a proper midterm trading signal, what we should get here is a breakout from this rectangle. As long as we stay here, the sentiment is neutral, but also in the same time negative. Why is that? Because rectangle is a trend continuation pattern. Trend here is negative. Why is that? Because we do have lower highs and lower lows, which are indicating that the trend here is negative. But if we would have a bullish breakout here, the next resistance is just nearby, and the next one, very important one, is here. In case that we would have a bullish breakout, you know where you should expect counterattack from the sellers. It's this area and this area. The top one is 150 pips higher. Euro to Australian dollar. You know that here I'm bear. Here I'm looking for a decline, but after this false breakout, where I remind you we had a position, luckily ended with a small profit. Actually, on break-even point, we closed this position. It's a beautiful display of this another principle of the price action, that false breakouts cause movement in the opposite direction. So on today's daily analytical report, you found out about two principles of price action trading. One is that price close the gaps very often, almost always. And the second one is a false breakout. So when you have a false breakout and it's estimated that it's false breakout, there's a high chance that there will be a very strong movement in the opposite direction, and that's what's happening. We had a false breakout, now the price is advancing higher. And actually just now we are meeting midterm resistance. Midterm resistance, which started here at the beginning of October, was the first contact with this resistance. Is so far it's a shooting star on H4, on H1 is a shooting star as well. It's not happening very often that price bounce just with one touch, but another hint for you. That's why I like to look historical movements, because sometimes it depends from the pair. So sometimes the price tests level twice or 3 times or 4 times. Sometimes the price just tests once. That's why it's nice to check how the price, how this instrument behaves. So look, here was a one bounce. Here as well. Here, I would say it was one. That was completely different situation. 1, 2, 2, 1, 3. So there is a chance actually that there will be just one contact with the resistance and the price will reverse, because it happened before. It happened very often. Actually, euro to Australian dollar bounced with one contact more often than it did with 2 or 3 contacts. So keep in mind that almost on most of the instruments, the price needs 2 tests or 3 tests. There are kinds of instruments that require just one test, like for example here, euro to Australian dollar. In a pair of American dollar to Japanese yen, sideways trend as well, below long-term important resistance. So sideways trend, it's a trend, this is a pennant. It's a trend continuation pattern. Trend is bullish, so it gives higher odds for a bullish breakout. So if you believe in this kind of formation, you should expect at least 150 pips upswing, because this is the place where price will contact with this horizontal resistance. How important is this resistance? You can see here. Right, so from the price action point of view, we should see a bullish breakout from this sideways trend here. New Zealand dollar to American dollar. Here, beautiful display of price action again. Beautiful display of another principle of price action trading. So we had gaps, we had false breakouts, and another principle of price action trading is broken supports becomes resistance. Resistance is broken, resistances become supports. And the green area was a support, quite clear. You can see that. After the breakout, it was tested as a support was tested as a resistance for the first time. Test was positive, and now the price is declining. Price is advancing lower. And last but not least, this pennant on euro to Canadian dollar, where I was telling you that there are higher odds of a bearish breakout here. But it didn't happen. We got a bullish breakout, and now the price is advancing higher to this support. What it can show you? It can show you that, again, this is this pattern, any pattern, is just a potential of the price doing something. But for the pattern to be a trading signal, you need to see a breakout. I said that once we will break this support and this horizontal support and this support created by the lower line of the pennant, you can think about opening short position here, exactly here where I posted that. But we had no breakout, we had no bearish breakout, we have bullish breakout, right? That is why I tell you it is always better to wait for a confirmation. Because if I would open a position inside of this pattern, anticipating that something will happen, I would lose money right now. I don't want to anticipate that something will happen, I want to trade. Inside the formation, this formation is not working yet. So there's no point trading inside of this formation. Wait for a breakout. In this case, we had a bullish breakout. Now the price is advancing this horizontal support. Again, it looks like a decent place to sell, but wait for the reaction. So far, you can see that there is a pressure on this level, and there is no real sharp decline. The price is advancing higher. Also, keep in mind this horizontal support here. As long as the price stays above the support, the sentiment is positive. Once the price will break this support, we will come back to the bearish trend. Thanks guys for watching daily analytical report. Remember, follow us on Twitter, because on our Twitter have really many interesting trading ideas. And you get that as soon as it's posted. As soon as I will find out something on the chart worth sharing, you will find out. You will get that on your mobile, on your if you have Twitter. So I think it's worth to give it a try. Thanks guys. Good luck with trading, and see you tomorrow.